Small Cap Power CEO interview featuring Offsetters Climate Solutions.
Offsetters Climate Solutions is Canada's largest and most diversified carbon management solutions company. Small Cap Power had the opportunity to speak with CEO James Tansey, where we asked him, can you elaborate on the recently completed acquisition of Forest Finance in Germany?
The acquisition of Forest Finance gives us access to a much wider range of sustainable commodities. We started out working in carbon as a way of investing into forests, and now we work with sustainable timber, with cocoa, and a wide range of other commodities. And that's a sector that's seen some of the fastest growth rates in the world, and we've seen $32 billion of sustainable commodities produced in the last year. Forest Finance has a 20-year track record of cocoa production, of sustainable timber production, and what we're really doing is taking that model and bringing it to the North American market. It's a private model in Germany, and we're using our public company structure to bring those investment opportunities to North American investors. It starts out continuing the way they have, which is really a project finance-based model, but our goal within the next 6 to 12 months is to launch a fund that creates opportunities for investors to build value and benefit from the growth of these commodities. And to put that into context, the cocoa market saw 780% growth in the certified cocoa over a 3-year period. We're seeing growth rates in all sustainable commodities of 15 to 20%. And so there's a huge opportunity to benefit from the growth of that sector as consumers shift their demand to wanting to see organic cocoa, organic coffee, sustainable forestry products.
What types of synergy do you see between the two companies?
Both companies were involved in carbon project development and have a great track record in that area. What Forest Finance really brings is capabilities in the management of other sustainable commodities, so cocoa, tea, coffee, and timber. So that's the first synergy, is it really helps us do things we haven't been able to do before. They have 23 million euros of assets under management through their asset management company. We're really acquiring the consulting and technical advisory team that built up that portfolio and managed that portfolio, and we'll build a new fund structure that allows us to expand the amount of investment we can direct into those kinds of projects. So we're looking at an initial raise of $50 to $100 million with very strong revenues based on technical and advisory services already.
What type of commodities and raw material sectors are involved?
So historically, our companies have been involved in producing carbon offsets from forestry projects. We've done 2 of the largest forest carbon projects in the world. And what this deal allows us to do is generate other sources of revenue from investments primarily into forestry and agroforestry projects. And that covers things like sustainable timber, sustainable cocoa, and potentially even commodities like coffee. When you look at that sector, the global sustainable commodity sector is worth over $32 billion annually. There's been very rapid growth in that market over the last 5 years as consumers are starting to demand more sustainable cocoa and more sustainable chocolate. So the overall sector has grown by about 42% annually. The cocoa sector, sustainable cocoa sector, has grown by 69% annually. And the UTZ certification for cocoa grew by 780% over 3 years. So it's an area where we're seeing very rapid growth, and we have a team with 20 years of expertise in enhancing productivity from cocoa, from timber, from coffee, from carbon. And that's really the opportunity that we're building into the core of the company. The other part of the company that makes this very attractive is that we have a very strong consulting group. So for many of our projects, we're able to get grants from government agencies and development agencies to cover some of the due diligence costs. We have a project in Dominican Republic now where we have a 400,000 euro contract to work with cocoa farmers. If that business model is successful, then we're able to start to invest in enhanced cocoa production. And we're not buying the assets. It's really like an ag streaming model where we help the farmers to improve their productivity, and then we get some of the benefit, a significant amount of the upside in enhanced productivity, as much as 80% of the additional revenues over the first 5 years. So that's really the model, is using our technical services and our expertise to deliver more products like cocoa, like sustainable timber, into markets where there's clear and rapidly growing demand for those commodities.
How do you see this benefiting Offsetter's investors?
You know, the carbon market has been growing steadily over the last 5 years, and what that allows us to do is invest into forestry projects. By broadening the number of, or the sources of revenue we use to invest into those projects, we're accessing a much larger set of markets. So carbon on its own is about a $300 million market globally right now. By accessing cocoa, which is an $8.5 billion market, by accessing coffee, which is a $15 billion market, we provide a much wider range of revenue streams to our investors. And we also give North American investors an opportunity to get access to sustainable commodities that they haven't been able to access. There are very few public companies that give investors this exposure to this kind of exposure to sustainable commodity production at this scale. In fact, we think we'll be the single largest, most diversified sustainable commodity company investment company in North America at the end of this transaction.
What are your main priorities for Offsetters for the remainder of 2015 and into 2016?
Well, we've spent the last 3 or 4 months developing completing the due diligence for the fund that we want to set up in early 2016. So we've looked at that portfolio of $17 million worth of projects. We've done a lot more due diligence on them. We've stress tested those investment models with friendly investors and with our partners. And we think we now have a portfolio and pipeline of projects that's going to be very attractive. It's going to meet expectations of investors that just want steady dividend, but lots of upside from those investments with the way that we've structured it. So having done a lot of that work over the last 3 or 4 months, the priorities for the next 6 months are really raising that initial capital that we need to invest in those projects. We have some that are ready to go within 2 to 3 months. The balance of the pipeline is investable within 8 to 12 months. So the real focus now that we've completed the transaction is to get out there, raise the capital that we need, and get the projects moving.
To learn more about Offsetter's Climate Solutions, visit the company's investor hub on smallcappower.com.